10 hidden traps in your insurance policy you won't believe. Do you believe that if you have a 10 lakh health insurance policy, you're fully covered up to any 10 lakh expense? Well, most people do. And that is exactly where the first trap begins. Insurance feels like a safety net. Well, it's supposed to be a safety net. But many a times it's a safety net with fine print stitched into it. Today, I'm going to walk you through the hidden clauses that quietly reduce claims, delay payouts, or sometimes reject claims entirely. And most importantly, how you can avoid getting caught into. Let's begin with something called disease-wise sublimits. Imagine a friend, say Rajesh from Mumbai. He has purchased a 10 lakh health insurance policy. He needs to get a cardiac procedure which would cost him 3 lakhs. He's calm and confident. I'm insured, he says. After the procedure is done, upon discharge, he learns that there is a 1.5 lakh sublimit for cardiac ailments in his policy. So now he's stuck having to pay the remaining 1.5 lakh out of his own pocket. This is something a lot more common than you would think. Sublimits are basically caps placed on specific treatments. Cardiac care, cataract, maternity, joint replacement, dialysis. Your overall cover may be 10 lakhs, but for certain treatments, the insurer quietly restricts the payout. The policy looks big, your safety net looks big, but the usable cover, it may be much smaller than you think. Now, let's talk about another such underestimated trap, room rent capping. Let's suppose your policy allows 2,000 per day for hospital room rent, but you choose a room costing 3,000 per day. What do we assume? Fine, I'll just pay 1,000 extra. But here's what most people don't know. Hospital billing is linked to room category. The surgeon's fees, doctor visits, nursing charges, even some procedures cost proportionately higher for higher category rooms. But that's not all. Here, the insurer doesn't just deduct 1,000 per day from their payable, they proportionately reduce multiple components of your bill. A room upgrade can quickly snowball into a much larger out-of-pocket expense for you. Next, let's look at exclusions. These are the real boundary lines of your policy. Every insurance policy has them. Pre-existing diseases during waiting periods, cosmetic procedures, war, riots, civil disturbances, certain natural disasters. Now let's take an example. There was a factory owner whose entire unit was destroyed during riots. A fire caused the destruction. He assumed that his fire insurance would cover it, but the reality? Claim rejected. Why? Civil disturbances were excluded. Now please understand this. Insurance doesn't pay based on emotion. It pays based on wording, which brings us to one of the most powerful concepts in insurance law, proximate cause. Proximate cause means the primary or dominant reason for loss. Let's say someone suffers a heart attack while walking, collapses, and is then hit by a car. But there is an accidental insurance policy in place. Their claim rejected. Why? Because the proximate cause was the heart attack, not the accident. Another example. Imagine an earthquake triggers a fire that damages your property. Your policy covers fire but excludes earthquakes. The insurer may deny the claim because the initiating cause was the earthquake. The closest, dominant cause decides everything. Now, let's discuss waiting periods. The not yet clause in insurance. Maternity benefits in some policies often come with waiting periods ranging from 9 months to even 4 years. Pre-existing diseases used to have waiting periods of 48 months, which has now been reduced to 36 months due to regulatory updates. Consider Priya. She buys maternity insurance as she is planning on having a child in near future. She conceives within a year. Her policy has a 2-year waiting period. Any claims she makes? Rejected. Insurance timing matters as much as insurance coverage. Moving on to another powerful clause that decides claim approvals and amounts. It's the reasonable and customary charges condition. Let's say a cataract surgery is billed at 1.7 lakhs. The insurer will review regional averages for the same surgery. They conclude that the average cost of a cataract surgery in that region is only 49,000. They will approve only 49,000. The balance? Yours to pay. This clause is designed to prevent overbilling. But if you don't check insurer approved hospital rates beforehand, it can become an expensive surprise. Now, let's address something critical: pre-existing diseases and disclosure. Conditions like diabetes, hypertension, thyroid disorders, even if controlled, must be declared. Insurance operates on the principle of utmost good faith. If you fail to disclose a condition, even unintentionally, the insurer can still reject your claim entirely. Full disclosure protects you more than it protects the insurer. Now let's shift to work-related policies. A factory worker suffers an injury outside official duty hours and files a workman compensation claim. Claim? Yes, rejected. Why? Because that coverage applies only during official duty hours. Insurance is extremely specific about the scope of coverage. Assumptions are expensive. So how do you protect yourself then? First, use the free look period. Most policies give you 15 to 30 days after receiving the document to review and cancel if needed. Don't just file the document away, read it. Check sublimits, check waiting periods, check exclusions, verify room rent limits. Second, know that you have a recourse. If a dispute arises, the insurance ombudsman provides a cost-effective grievance redressal mechanism. You're not powerless. Now let's look ahead. The insurance industry is evolving rapidly. AI-driven underwriting is assessing risk faster. Blockchain-based claim processing is being tested to reduce fraud and improve transparency. Some insurers are experimenting with dynamic sublimits that adjust with real-time medical inflation. Policies are becoming more customized, but also more complex, which means awareness is becoming your most valuable asset. Let me leave you with this. A large sum insured does not guarantee full protection. Sublimits quietly restrict payouts. Room rent caps amplify expenses. Waiting periods delay claims. Proximate cause determines eligibility. Exclusions define the true coverage boundary. Non-disclosure can void entire protection. And the free look period is your safety valve. Insurance is not just about buying a policy. It's about understanding the contract you are entering into. The difference between a smooth claim and a financial shock often lies in one overlooked clause. So tonight, I encourage you, pull out your policy document, read it with fresh eyes, ask the right questions, seek clarity. Because insurance works beautifully when you know exactly what it covers. Thank you for being here. Stay insured, stay informed, and never ignore the fine print. This is Parth Thakkar from Phoenix Insurance, your friend in need.
This is an educational video. This is not a recommendation or advice. Viewers are advised to do their own research and consult SEBI registered professional before taking any decision.